Even with less inventory and higher rates, the data from this year sure looks a lot like last year. Plus, a few signals of the spring break impact. We'll cover that and more in this week's report. As always, thanks for taking a few minutes to join us for a weekly look at real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here with John Green Realtor, and I'll be taking you through this week's findings. So let's jump in. 4 counties for the new listings that we track. You can see a little stall for the next few weeks as we work through the local spring break season, and then inventory levels will likely rise until about June when they historically kind of seasonally peak. One thing is clear, we are likely not getting back to inventory levels of the previous years at any point in 2023 unless something major, significant type of economic event happens throughout the course of this year. Here's under contract activity, and you can see this number pushed up again this week. This was our busiest week of contract activity since last summer, kind of mirroring the week over week increase we saw in 2022 as well. Let's go and look at our real-time showings indicator. We love this graph because it's a good forward-looking indicator. It's going to tell us exactly where the market's going because these are active buyers that are in the market today looking at homes. You can see a little bit of a dip, and we'll go through that with the spring break season, and then we should see a little pop and peak towards the end of April before this number starts to trend down throughout the rest of the year. Off-market listings are those listings that came off the market without a successful sale, and you can pretty much see the same story as last year, almost identical as last year these past 3 weeks. Simply no homes leaving the market unless they have a contract and a buyer. Under contract versus new listings. So this graph depicts balance in the market. 60% is pretty normal. 100% is kind of way out of balance in favor of sellers. Another metric that's very much mirroring last year, we just jump up again with a week of same inventory, but a significant spike in sales. And then we add in our off-market listings here to see the full impact of the market of what's coming versus what's leaving. And you can see here, same trend, demand simply outpacing supply. So what does all that mean? Here's a quick update for pricing. We're using local data for Naperville as a proxy. And I found this week's median list price data pretty insightful. So this is a good leading indicator for us as well, because especially that dotted line, because that's the 7-day moving average and a really good insight into the current brains of sellers and their agents on where to price into the market at this moment. And you can see a huge spike there, and that's a real-time reaction. Sellers and list agents see the same data we're looking at and we're sharing here today. And when supply is low and demand remains solid, you push price. The interesting thing is we thought interest rate increases would kind of artificially slow down the rate of price increases this year, but they certainly cooled things in the fall. And while we're not back to peak pricing from last year, it may come really close in the next few weeks, as you can see where it peaked out last year and kind of where it's trending to. So something we'll watch through the month of April for sure. So to recap, this year and last year have a lot of similarities. Will be very interesting to see if anything breaks that rhythm. And spring break has a bit of a ripple effect, and we're starting to see that in the numbers, and we'll likely throttle things just a bit these next few weeks. So stay with us for our upcoming insights, and we thank you so much for joining us this week, and we'll see you again next week.